One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. The probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5% after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that is a substantial part of your outlook for the new year, the Trump put. Explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
In the fascinating, ever-evolving world of stock markets, certain pivotal moments not only capture attention but entirely redefine expectations. These instances carve paths for groundbreaking transformations, influencing economies, industries, and individual investments on a monumental scale. One such instance involves Nvidia, an undisputed titan in the chip-making arena, turning heads with its unprecedented growth amidst the unfolding AI revolution. A company revered for its cutting-edge technology and forward-thinking innovation, Nvidia is at the center of a story that intrigues and excites both investors and market analysts. Tom Lee, a distinguished figure in equity research and a managing partner at the illustrious Fundstrat Global Advisors, has made a bold declaration regarding Nvidia's future trajectory that has stirred the market winds. But what exactly underpins this bold prediction of tenfold growth? What factors contribute to Nvidia's monumental significance in today's technological landscape? Join us as we delve into the layers of this captivating narrative filled with twists, turns, and exponential possibilities that continue to captivate investors worldwide. Welcome back, everyone, to Investocracy.
What I'm thinking about with animal spirits, and it's a Milton Friedman reference, is the ISM's been below 50 for almost 3 years, meaning companies have been cautious. Their visibility hasn't been great. But finally, the Fed is cutting, and we have an incoming administration that's seen as very business friendly. And so I think companies for the first time in a long time are going to be expansionary, feel confident doing mergers. I think this is a very good environment for small caps, mid caps, the financials, and cyclicals broadly like industrial. So I think it's going to feel a lot like the market broadens in 2025. Even as tech sort of keeps up with the market.
Now, I know you are a quintessential optimist, Tom, but I'm curious, where do you see the biggest risks to that forecast for next year?
Well, there's, the big foil in 2025 is going to be whether or not there's a policy error, and there can be two sources. One would be if the incoming administration does implement tariffs that are damaging to the economy, because we know that they'd be immediate effects, or if there are mass deportations that have some unknown impact on labor markets. The other source would be if the Fed becomes too inflation-focused and allows the labor market to weaken. And so we actually slip from the Fed sort of trying to support the economy to the Fed trying to save it. I think that would be a very adverse development.
The story of Nvidia is intricately woven into the fabric of the AI revolution, a movement reshaping industries across the globe. This narrative began a new chapter on November 30th, 2022, a date marking the pivotal release of OpenAI's ChatGPT. This AI phenomenon sparked a sequence of events that have propelled Nvidia's growth trajectory to new heights, drawing apt comparisons to the meteoric rise of social media platforms like Facebook during their nascent stages. In these transformative times, Nvidia's financial metrics, from revenue streams to net income and free cash flow, have skyrocketed. This exceptional performance is not merely a superficial jump, but a testament to Nvidia's steadfast dominance in the tech sector, having strategically seized approximately 90% of the GPU market. But why the emphasis on GPUs? These powerful processors are the backbone of AI infrastructure, acting as essential catalysts for innovation, with industry prognostics forecasting investments in the trillions over the coming years. Nvidia's upcoming Blackwell GPU architecture, coupled with its successor Rubin slated for a 2026 launch, further underscores the company's readiness to capture a burgeoning market share as AI continues its relentless ascendancy. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Next guest, bullish stocks in 2025, which is really nothing new. Ed Yardeni is the president of Yardeni Research and joins me now. We kid, of course, but it is true. You are a so-called perma bull, unapologetically so. I might add. Is that right?
That's correct. I think, if you look at the market since World War II, if you stayed in the market, you would have been wrong 14% of the time, maybe. It's been a bull market for quite a long time, and I've tended to counter the perma bears, looking for some balance anyways.
Well, you've done it well. So why do you think this is going to continue for a while?
Well, I think that we just, over the past 3 years, had the most widely anticipated recession ever that didn't happen. It was the Godot recession, the no-show recession, and it kind of made sense that to a lot of people that it should happen because interest rates went up so much. But if we couldn't get a recession over the past 3 years with the Fed tightening, I think the outlook remains pretty optimistic for the economy. And on top of that, we're expecting to see productivity make a significant comeback here. It's already made a significant comeback. We think it's going to continue to grow maybe 2.5% to 3%, which is pure gravy for the economy, for economic growth, keeps inflation down. It's great for corporate profitability, and it keeps wages rising faster than prices. All good.
However, as with any compelling narrative, this story has dual facets. While Nvidia's relentless innovation and stellar financial growth chart an optimistic path for continued expansion, the narrative is not devoid of challenges. Questions arise concerning whether Nvidia's firm grip on the market, fortified by its exclusive CUDA software, may prove too constrictive, fostering concerns about market competition. Whispers about potential probes by the Department of Justice into Nvidia's practices suggest the looming specter of an antitrust scenario. The suggestions of monopoly extend beyond idle speculation. They paint a reality that might confront Nvidia with significant regulatory hurdles. Moreover, competition in the AI domain is fierce, with behemoths like Microsoft, Alphabet, and Amazon intensifying their focus and investments in proprietary chips or turning to cost-effective rivals, such as advanced microdevices, for alternatives. Despite all hurdles, Nvidia's resilience and their track record of innovation render them a formidable investment opportunity, though one that necessitates a prudent approach and careful due diligence. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, essentially, you think the debate over higher interest rates or higher for longer or a slower Fed is overrated, that we don't even need the rate cuts that some suggest we can't live without.
Yeah, I think the economy over the past 3 years has demonstrated that it's resilient, that it can live with these interest rates, and that these interest rates may actually be normal. I mean, I recognize the Fed tightened dramatically from 0 to 5.5% over the past couple of years, but that's from zero. And I view that as the abnormality. Normal is, I think, where we are now, 4.5% plus minus 25 basis points for the bonds. And I think the so-called neutral Fed funds rate is pretty much where we are right now.
They do pressure the multiple, though, right? I mean, there is an impact from higher interest rates. So you have to use the strong earnings, the strong economy that we have to continue to generate strong enough earnings to offset the higher interest rates, which would pressure the multiple, making it really hard to have multiple expansion again.
Well, I wouldn't really want to see much more multiple expansion. I'm expecting that this bull market will be increasingly driven by earnings over the rest of the decade.
In conclusion, as we navigate the complexity and depth of Nvidia's ever-dynamic ecosystem, it becomes increasingly clear that the company stands at a critical juncture in its illustrious journey. Embarking on the ambitious path to reach the tenfold growth envisioned by Tom Lee may appear daunting, yet Nvidia's robust foundation and significant foothold in the AI realm position it as an indispensable player in the tech industry's future. At this intriguing inflection point, Nvidia faces potential challenges from fierce competition and regulatory scrutiny but retains its promisingly rock-solid prospects. Market forecasts suggest reasonable growth expectations, underscoring Nvidia not simply as another transient market leader, but as a consistent trailblazer and innovator. As the discourse surrounding Nvidia's future unfolds, one question remains: will Nvidia rewrite history in the stock market, solidifying its legacy, or will it encounter barriers that necessitate a recalibration of expectations? Let the engaging and insightful discussion commence. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.